As a follow-up to my last video, I'd like to explain further what withholding tax is and why real estate companies deduct withholding tax, from commissions. So basically, withholding tax are tax deductions from source, right? And in section 78 of the Companies Income Tax Act, companies were actually asked to deduct withholding tax in certain instances. Let me read them. Any person who, being a company, is authorized to pay any interest, royalty, rents, dividends, director fees, commissions, or fees is required at the date when the amount is payable to deduct tax thereon at the prescribed rate and remit same to the Federal Inland Revenue Service within 21 days after the duty to deduct arose. So you see there that commissions were mentioned, right? So as a real estate company is required to deduct, withholding tax from commissions paid to, to realtors. But like I said, this tax is not just like deducted and then it goes, because they're supposed to issue you a credit note so that when you file for your taxes at the end of the year, you can present that credit note to FRS to prove that you have been deducted on this particular transaction, so there's no double taxation anymore. Also, this tax is not a separate tax, right? It also adds to the company income tax that's to be filed at the end of the year, right? So as a real estate company, when you deduct withholding tax, you understand, and you pay to FRS at the end of the year, it forms part, of your general tax that you're supposed to pay at the end of the year. So that's why it's important that this be deducted regardless of if they are profitable or not. There's really no tax relief on withholding tax. It has to be deducted.